Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutamente in the right place. First, we've got to knock our standard disclaimer out of the way so we can get on with it. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading, it does involve risk, and there is a risk of loss. Nothing contained in this webinar or the webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know you do trade at your own sole discretion. Alrighty then. Tonight I'm going to start off with the Russell. Let me go ahead and get a chart up here for you. And we're going to, tonight's topic is more or less kind of the good, the bad, and the ugly with respect to drawing region boxes to take trades. Some of you are completely new. Some of you are visiting. And so I'm going to take just a brief moment or two to orient you as to what you are looking at here. Let me clean this chart off a little bit here. Let's see, where's the drawing tool thing? Drawing objects. Go adios. Bye-bye. For simplicity's sake, I'm gonna go ahead and toggle off the predictors just for now. These sort of oval bubble-looking support and resistance levels that paint in real time, especially when you're going sideways here, can be just a little bit busy. So for simplicity's sake, I'm just going to toggle those off for now. And what you're looking at here is a data feed from the broker for the Russell. All the equities, of course, are on the June contracts for about another month or so. The Russell is a $5 tick instrument. We have our power meter indicators up here. We have background colors. Generally speaking, if a market's heading up, it's going to be green. If a market's heading down, it's generally red. If a market is sideways, you're going to notice that it's going to look like a striped shirt. Green, opaque, red, sort of opaque, green, etc. This is, you can see here pretty much had a sideways market. So the first thing we do when we think about trading pretty much any of these markets is we are, in fact, I'm just going to go ahead and put it right on here. This is the sort of the sequence that we go through in terms of contemplating taking any kind of trade in these markets. So the first thing we need to ask ourselves before we even think about trading is there a trend? If the answer is yes, here, let's do it this way. Then is it up or down? Because as far as a trend is concerned, that's pretty much the only choices you have. And let's put the second caveat in here. If no, then we have to assume that we are, whatever you want to call it, range bound. And there is a, sort of a small, quick set of decision making we do around ranges. Generally, we want to see the range be greater than 20 to 25 ticks. That's pretty much the minimum size. If it's under 20 ticks, if you have like a 10, and we'll look at this on different charts. If sometimes these ranges are only like 5, 10, 15, 20. 12 ticks or so. It's just by the time you factor in slippage and commission, there's just no sense to trade it. Oh, and back up here. So if yes, now and then the types of trades that we take, if you are in a trend, if the trend is yes, up or down, then we are more or less looking for retracements. So one of the most, this is probably one of the most important takeaways of tonight is to establish whether there is a trend or not. And if there is a trend, we take the retracement. So in trends, you have thrust and you have retracement. Let's look at some examples. Let's start over here. Actually, you know what? I'm going to start with some very simple examples. Here is a period of consolidation around the midband where we could put a region box in, where it sat there for a little while, a few minutes, and we'll get in more detail about the box itself. Let's talk conceptually for a moment here. Sometimes we get these little ABC patterns that most of you have come to know and love, if you will. There's the thrust. Here's the retracement. Pulls back and holds the level that you got in at when you came out of the box. And then in an uptrend, the thrust direction is, of course, up. Here's another example of a retracement. And another region box right here. So the rule set kind of goes like this, and this is really simple. I mean, it's not, it's really no more complicated than this, literally. Where I'll explain how it can become more complicated. So in an uptrend, we are looking for retracements slash pullbacks, if you will, right? Pullbacks to somewhere located at or near the midband. Now, where this becomes complicated, and if you've traded these markets, Kumaresh, yeah, this is Pacific time. I'm here in California, so this would have been, like we're looking at this morning on the Russell. Here you're looking at sort of mid to late morning. This is 9 o'clock here. Here's 10 o'clock, 11 o'clock, noon, and then of course this is going into the close over here. So conversely, in a downtrend, we are looking to buy or sell retracements into the midband that are pulling back to the midband. Let's go over here. Now, at 8:35, we can see that if you would put a box on the midband somewhere in this area right here, you got filled long on that bar close. And here is a case where in this particular thrusting move up, there were just not enough. And let me be clear in what I'm trying to explain here. So as a market is pushing very powerfully in an uptrending move, so in this case here on the Russell, there was a lot of buy programs that were running, pushing the market higher. And in cases where it moves up very precipitously like this, there's nobody really sort of taking the other side of the trade, and so they can just push the market up. Evidenced by the fact that the pullbacks were, almost non-existent, and when they were very shallow. Now, what's important to remember when you're looking at patterns like this in a big uptrend is that even with this pullback right here, this very slight shallow pullback here, where you slightly pierce the stealth line. So just to orient everybody here, we have the middle band, we call it midband, the big thick, line right here, and we have 1, 2, 3, 4 bands above and 4 bands below it. And so down here, this is called line 2, and then up here is called line 6. So if you notice when a market's moving very strongly, it will respect line 6 and the stealth line. The stealth line is the sort of sneaky snake looking line. See this little green snaky looking line? That's called stealth. We've had that forever. That was one of the original indicators we had way back like 9 years ago. Stuck with us ever since. So it won't. It won't pull back enough. And what I'm trying to say is this, is if you miss this initial entry way down here, there was just not enough pullback to get back in it. Not until you got way over here, where it came back and dropped down and sat on the midband for about 5 minutes. This was a sufficient retracement to get in. Likewise here. So in an uptrend, the thrust move is always up. The pullback or retracement is always down. in the counter direction into support. So we're buying support. Let me see if I can find an example of a shallow retracement. Let's go look over here. All right. Now, this is where something that conceptually is very simple, buying or selling pullbacks, becomes a little more complicated. So let me frame it this way. The ideal condition for drawing a region box to enter a trade, and the region box is from the Object Trader tool. You simply hit enter and then place it where you want it. Dial in long or short, get your settings all set, and then it takes the trade. So, for instance, right here is an ideal condition for a mid-band region box. In the case where you had both long and short enabled, you would have been fulfilled short on the close of that bar right there. You never got the long here. And if you turn both sides on this, you never got the long. Now, what I want to show you here is that the retracements don't always come back to the midband. Now, we've said this before, that if you have issues with retracements that don't come to the midband, that are very shallow, for instance, here's an example right here on the short side. Notice how in the case of the downtrend, the thrust direction is obviously down. Downtrend, the thrust is down. And in the downtrend, the retracement is in the counter direction, which is back up. Now, ideally, in this example here, we would have loved to see this pullback get way up into here, like we got this earlier box right here. Do a beautiful little box at the midband, roll over, and life is good. Well, that's what I'm trying to show, Robert. Robert is asking, he says, in an up market to usually box below the midline or above in a down market. Well, this is what I'm trying to show, and you're striking to the heart of the issue right here, which is this, is that at the time the retracement occurs, you don't know in real time. I mean, we can look back and say, okay, this box is right here and that box right here. We have the benefit of hindsight. But in real time, the way it really works is this, is that you have what's called shallow retracements. And the criteria to enter a shallow retracement is at least it has to break stealth. And in the case of the short, line 2. So you see this retracement right here where these bars pierce the red stealth, the snaky little red stealth line, and it pierces through line 2. Line 2 is the straight thin line right here. This is line 2. This is the minimum requirement of retracement to get short. Now let's contrast that. Let me get them sort of positioned so you can see both at the same time. Over here, we were illustrating the fact that in this up move, almost none of the sideways / pullback type movement volatility really never broke line 6 or stealth with any, even here it just wicked through the stealth, never even really broke 6. So what I'm trying to say to you, to be clear about this, these little pullbacks here are not legitimate retracement entries. They're not. This is an example of not. You would not use the region box on a pullback on a movement that looked like that. So for instance, in the this morning, I think we were going to box in the Russell. This was earlier, I think like 7. Maybe I can go back and find it. And we didn't put the long side on because it just came off a sell-off, and then the silly thing ran, I don't know, very similar to this. It ran like 70 ticks straight up and with no pullback, so there's no chance to get in until the very tail end of it. So back over to the point here. So 1044, what's your question there? 1044. Okay, yeah, okay. So Robert's asking about this pullback right here. Would this be an acceptable pullback? And the answer is yes. Yeah, in fact, I would say that was with this ABC pattern coming out of the box here. So the initial entry is on any one of these, depending on when you started to draw this box. Any of the closes outside of it got you long. on any of these bars right here. Long, right? Bipped up, you got your thrust, maybe you got a scalp off here, comes back, pierces the stealth line and line 6, so that meets the minimum criteria of retracement right here. So that's a legitimate secondary entry to the long trade. Yes, Robert, to answer your question. Kenneth, that's a good question. People ask that all the time. There's no set. The question is this: how many bars is there? Is there a set number of bars to be in the box to qualify it as a box? And the answer, unfortunately, is no. And the reason for that is, at any given point, we don't know in real time how many bars it's going to take for that retracement to play out. In this box right here that Robert pointed out at 10:44 a.m. Pacific, you only got maybe 2 or 3 bars in here, right? And there are cases where that's going to be the case, where you might only get 2 or 3 bars, and then bam, you're in it. There are other ways to get in here. If you don't draw region box, you can put limit orders in. You can simply right-click on your chart and put a limit order in. You'd be filled on a limit order. If it's moving really quickly and you want to jump on the bus, there's market orders you can take. And we have a line and array tool that you could draw over it like that. It would also get you long in here. So there's no set number of bars. You can see over here that this box here had probably 1, 2, 3, 4, 5, 6, 7, 8, maybe 10 or 12 bars in this one right here. Over here, for instance, this one right here, let's just take a quick look at it. 1, 2, 3, 4, 5, 6, 7, maybe 8 or 10, 8, 9, 10, maybe plus or minus. Over here, 1, 2, 3, 4, 5, 6, 7, 8, 8 or 9. I'd say minimum 2 to 3, and in some cases it can go as high as 9 or 10 or more in terms of bars in your actual box. But the thing you want to look at, let's go back to this notion of placement of the box. There are 3 conditions when it comes to taking a retracement in a trend. What we talked about here was the shallow retracement. Okay, so let's do it this way. We drew a condition here where if it come higher, which it didn't, but it could have come up at or right on the midband. This is the ideal condition. And then sometimes it can go beyond. In the case of the downtrend, it can go deeper. It can go all the way up into here. Shallow, this is an example of shallow. Midband, here's an example of midband. Deeper, we'll look at some deeper retracements. In some cases where the trade goes deeper, the bars may actually turn the other color. So you might get yellow and blue bars up in here, which make people nervous. And each instrument is a little bit different in how it respects the swings. The Russell is pretty good. It's not as volatile as some others, like NASDAQ, very violent, deep retracements. It's not unusual to see, NASDAQ have a thrust down like this, and then next thing you know, it's in your face and all the way back up here, and you think it's trend changing, and the silly thing rolls over, and then bam, another 80 ticks straight down. That's why we took NASDAQ out of the room. It was just so volatile and unpredictable. It was just, you had to babysit the thing with almost 100% of your attention. So we got NASDAQ out of there. I mean, there's people that still trade NASDAQ, and I occasionally do too, because of the huge volatility. But you have to realize that some of the price action would beat you up till you might take some pops until you catch that. The other analogy I've said many, many times before is if you look at the area around the midband as like a strike zone in baseball or softball. Everybody's played softball or baseball, or at least you've watched a game where they're playing it. So in a strike zone, up here, the top of it is your shoulders. The bottom of it is your knees. And the plate is located here. You have a home plate. You have a home plate right here. And so the edges of the home plate frame out what essentially is a strike zone. So if you are a person standing here, this would be your strike zone. So the sweet spot in the middle of the strike zone, in the case of a downtrend, would be located here. That's right in the middle, right? That's our midband retracement. Okay? The shallow one is located down at your knees. Think of it that way. You were standing at the plate getting ready to hit a baseball. That would be the lower end, down at your knees. And then the The upper part of the retracement area would be located up near your shoulders in the strike zone, right? Now, in the case of an uptrend, it's pretty much similar in the way it's framed out, only it's a little bit different and looks like this. So let's do it this way. Let's do it this way. Let's do it like this. Here's the strike zone in an uptrend. So the pullbacks in an uptrend are pulling back down because the trend is up. So the thrust move is up, the pullback is down, right? In the case of the downtrend, the reverse is true. The thrust is down and the pullback is up. So here you are standing at the plate in an uptrend. Here's the plate right here, the edges of it. And your shoulders are up here, like this. This is your shallow retracement. Remember, it's got a pierce, line 6, and stealth. So these bars right here, this would not qualify. See it? If you're just wicking it, that doesn't count. It's got to come past it. Here was a good example Robert pointed out right here. That is acceptable. So if I was to draw the strike zone in here, like this pullback is at your shoulders, right? See that? If it pulled deeper, it would look like this one over here. See, right around the midband. That's right around the middle of the plate, right down the pike. Right? See that? And if it goes deeper, of course, it's down at your knees, down here like that. So this is I don't want to sort of overcomplicate this because I think everybody conceptually understands the idea of getting in retracements. It's easy to say, I see I'm in an uptrend, I'm looking for pullbacks, and I'd love to see them get to the midband. When in reality, in real time, it doesn't always work perfectly like that. Yeah, if the Kumaresh, I think I answered that. If the bars are moving too quickly and you don't have time to put a region box in, there are other ways to get in. You can just like I said earlier, you can right click, buy order, limit. You put a limit order in there, bam, it takes a second. A market order fires immediately. So let's say it's pulling back, and you're like, this is the pullback I want to get in, and these bars are forming really quickly. You're trying to get your region box. Here's your object trader tool panels over here, and you're trying to get that region fired up to get it on. Next thing you know, the thing starts bouncing. Well, don't panic. Just hit market order. Bam, you're in. And if you use object trader, it's going to put the targets and the stops and help trails and all that, going to manage the trade. So, I mean, there's different ways to get in if you can't put. I guess what I'm trying to say is we don't need to use the lack of a region box as an excuse that that you didn't catch the trade. There's other ways to get in. You can do it to get in. Now, before I move on and we do some exercises together, I want to take some other questions and make sure that what we explained in terms of retracements is absolutely clear. I mean, I would say that as far as the Viper trading system methodology, this is the meat and potatoes of it right here. This is the heart and soul of our trading system right here. If you come to the live room and you see us trade and you hear trade calls, it is the essence of what you are seeing right here with this retracement, this whole idea of retracement, whether it's an uptrend or a downtrend. Now let's do some exercises. Everybody understand that? Any questions? Because we're going to move on and do some exercises around, or we're going to look at some charts. We're going to pretend we're looking at it tomorrow morning, and I'm going to ask you some questions on whether you think it's a legitimate region box or not, and you're going to say yes or no. So essentially, you're going to be making the trade calls. Any final questions on this? Because I'm going to move very quickly in the next half an hour. We're going to cover a lot of trades on lots of different charts. Let's see. At 11:12, were you willing to go either way because it broke resistance? 11:12 question from John H. 11:12. So yeah, that's a good question, John. What he's saying is this, and it's a legitimate question. Here essentially is what he's saying. He's asking specifically about this box, this region box located right here. Now, at the time that this drew, you can clearly see that the trend is still up. The background is still green, right? He's asking about this box right here. Should it have been enabled short he's saying should this box have been enabled long only or both ways? Now you can see why you would make the case for long only, yes? Because here is your thrust coming off of this box right here. Here was your thrust, and here is your legitimate retracement. Actually, you could have made the case that there's a, you know, if you were really trading it, that there was a box right here. And you could have theoretically already been long, right? If you did draw that box, you could have been long on the close of that bar. Now, if you didn't get this, you would redraw or draw a box here if you're watching it. Now, let me ask this question, make sure to see if everybody's awake and you had your espresso and you're alert and paying attention here. Even though the background is green, and the trend technically at this point at 12:20 Pacific is still up, how could you make the case to enable both sides? What would be, and here I'm gonna draw a vertical line that's gonna help you. I'm gonna draw a vertical line right there. Okay. How could you possibly make a case that you should enable short out of that box when the trend is up? That's the question. Shouldn't you go long only? That's basically what we're saying. But I drew a vertical line for a reason. Why did I draw a vertical line there? What does that have to do with anything? It has nothing. What does that got to do with this box? Okay, let me advance the chart and answer your question. What is this area right here? Oops, sorry about that. What is that? What is that? Why am I drawing these lines? What is that? What does that have to do with anything? Drawing lines everywhere. It makes no sense, Charles. It's the last hour of the trading session. Right, Chris H. got it. A couple of you got it. It's the last hour of the trading session. This is one of the rare times in the market where you can allow, you can look for V tops, you can look for V bottoms, you can let mid-band region boxes go either way, because in the last hour, there's a lot of volatility into the close, and they can take the thing, they can run it back up. If you turn the long on and it closed up, you would have been long here. And you can turn the short side on and catch some down moves here into the close. Here's the close over here. Okay, when is the other exception to the rule where you can enable, in a trend, you can enable both sides of the region box? What's the other times? There's at least one or two other times when you can go against the rule of long or short only in a trend for a region, mid-band region box. What's those other two times? I'll give you a second to respond. For those of you that are new, what we're talking about, let me go back here, is if you look at this box as it drew right here, and you ignored everything else except for the fact that you were green in an uptrend, most of you would probably make the case this should be a long-only box, no shorts. But we're within the window of the last hour. Good, market open. Market open in news, good. News normally comes around 7 a.m. Pacific, okay? So as far as rules go with allowing trades to go both ways, you're looking at market opens. Now, when I say market opens plural, I'm referring to that can be crude oil at 6 a.m., yes? And that can be the equity markets at 6:30 Pacific, yes? And news events. That typically comes around 7 a.m. Pacific. Market opens, in the case of the equities, of course, is 6:30 Pacific. Oops, PST, market opens. And the last hour of the trading session. You don't have to memorize anything important here. Just keep it in mind that, the market open. And when I say market open, technically that sort of engulfs the trading event, or here, news events. Typically we'll let this go about an hour. So it's going to run to 7:30 anyway. So it kind of engulfs the news, but we know the news can create V-tops and V-bottoms too, or reversals, trend reversals. And the last hour of trading, which is of course from 12 noon Pacific to 1:15 p. But you really don't want to trade after about 1 o'clock. Okay, those are the exceptions. If you're in a trend sort of in the middle of the day, like you were here, 9, 10, 11 o'clock, you're not going into the close and you're trending, yeah, of course, you want to go with the trend here. Okay, you're going to take long pullbacks only. So, for instance, these boxes were all long onlys. All long onlys. Long onlys. Now, yeah, okay, Paul is saying, what if you're trading in the middle of the day and you have a pullback and the trend changes? Well, yeah, of course. In that case, you're not talking about an exception. You're talking about an actual trend change like you had over here, where obviously you're going down and then you sell the pullback. Yeah, so when you go, and it doesn't always go from up to down. Everybody knows that, right? You can go from up to sideways. You can go from down to sideways. You can go from sideways to sideways. And we'll look at that in a little bit. All right, let's do some exercises. Any final questions? Everybody grasp what we're doing here? Any final questions on how we do this? All right, let's start doing some exercises together. I'm going to show a series of region boxes. I'm going to start with Russell, and it's a very simple question. It's going to be yes or no. Is it a legitimate region box or not? Hold on, I'm going to pause the chart. Okay, actually, I'll tell you what I'm going to do. If there's no more questions, I'm going to completely erase everything on this chart. Remove all drawing objects. Bam. Okay, totally clean. Now, I'm going to do this in the context of trends, and we're going to do this exercise for a little bit together. And then I'm going to mix it up a little bit, and we're going to look at ranges, because ranges are different. Now, we're going to do a rapid fire of these. We're going to do a rapid fire. So I'm going to only give you, because sometimes these markets are moving fast. You can't sit there for 10 minutes thinking, pet your dog, drink some coffee. Should I get in? Huh? What do you think? I don't know. Let me think. By the time you think about it, it's done. So literally, I'm going to give you 5 seconds to type in yes or no. And just type in the letter. If the answer is yes, it's legitimate, you type in yes. Okay? If you don't think the box is legitimate, you type in a no. Okay, we're going to do 2 real quick right now. Ready? Here we go. 5 seconds on the clock, each answer. I'm going to draw a region box right here. Legitimate, yes or no? Right here. This one right here. Type it in. 5 seconds. Just a wire and in. Bam. Don't think about it. 4 seconds. 3 seconds. Legit. 2 seconds. Get your answer in. Time's up. Yes. That's legitimate. Okay, question number 2 on the same chart. 5 seconds on the clock. Legitimate, yes or no? Right here. 5 seconds. Just a wire and in. 3 seconds. Yes or no? Legitimate. Remember our criteria. Remember the criteria for legitimate region boxes, right? We're in an uptrend. I'll help you out there. And it's a retracement. We see that. It's pretty clear. Does it meet the criteria, yes or no? Screen shouldn't be frozen, John. I'm showing you we're on air. We got 2 boxes. Time's up. Yes. Okay, good. Everybody got that right. Well, no, there's a couple of no's mixed in there. I'll circle back and explain that. 3rd box, yes or no? 5 seconds on the clock. Right here. Yes or no? 4 seconds. Type it in. Would you take that tomorrow morning? Tomorrow morning you're trading the Russell and you get that pattern right there, and it's 7:10 a.m. Pacific time. Are you going to take it, yes or no? Because that's what you're asking yourself, right? This exercise is legit. It's trying to say, hey, tomorrow morning, if I see this pattern, am I going to take it, yes or no? Because that's how quick you have to make a decision. It's 3 seconds on the clock. 2 seconds. Type in a wire and in. Participate if you can. It's going to help you remember tomorrow morning or in the future when you trade. Time's up. Okay. Now, let me answer this in the following order. In the case of the first box, this is totally legitimate because it's almost down to the midband itself. So you have sufficient. So why do we have these rules? Let me explain. If you try to get in on a shallow retracement and it has not pulled deep enough back, then in order just to get back to the swing level, there's just no meat on the bone, and the likelihood of you buying a top and getting stopped out is very high. So there has to be sufficient retracement to get you in. That's why we have these rules. Okay, that's why they exist. We're not just half-heartedly sort of making up, well, you know, you got to do this. I mean, there's some reasoning behind why we're doing it, right? It has to be deep enough to allow enough movement to at least get back to the swing for a scalp trade. This was very definitely a yes. Now, remember the criteria in an uptrend. The retracement has to pierce the stealth line, which it did, so check the checkbox. And it has to pierce line 6 sufficiently, which it did here with these bars right here. So it's broken in checkbox number 2. This is a yes. Legitimate. Now, this third one is borderline. Now, if you say, well, you know, technically speaking, Charles, that bar pierced stealth and line 6 just barely, and this one did too, just barely, and you only had 2 bars, and then it bipped up very quickly. You could make the case either way on this one. This is a borderline one, borderline yes or no. So if you were conflicted on that, I totally understand you, and that's why. Now, if I had asked about these similarly to this one, would be this one right here. That's a tough case to make because, you know, unlike this box right here, which had sufficient depth of retracement, and clearly this one right here, sufficient depth of retracement, these were borderline pretty much no's. Okay, it's got, that is just not deep enough, and it probably happened so darn quickly you probably couldn't have caught it anyway. Yeah, not enough. That's what you're looking at, Brian, and not enough room for a scalper. So that's another thing I think that helps visualize this as it's happening. These bars are flying at you in real time, right? They're coming back. You're hearing in the room, I'm looking for a pullback to, you know, whatever, 0750. I'm looking for a bounce at or around the midband to get long for a bounce in that uptrend. And as it's pulling back, you know, in the room, a lot of times Gary will try to draw it. Sometimes we can't draw it. We can just verbally describe it because it's moving so quickly, and then you have to make some decisions. So what we're saying is that there has to be enough retracement for there to at least get back to the swing here, for at least to get back to the swing for a scalper here, like that. Okay. All right, good. Everybody did great. Perfect. All right, let's do another one. Let's do a couple more together. And then we're going to talk about ranges, because the market spends about half its time in ranges, and you're going to have to know how to deal with ranges. Okay. I'm looking for trends. I'm looking for trends. Boy, there's so many ranges. Oh, man, this is tough. All right, I found 3 on another in another part of the day. Here we go. I'm going to do 4. Yeah, well, that's the thing. I mean, like I said, we can look back, Brian. There's been several comments that what I just showed, even though I showed it and it worked out, there's several cases you're going to find as you trade more and more and more that, you know, if you're going to wind up buying the top or buying the, selling the bottom, and you're going to get stopped out. So it just has to be enough pullback to get in. Ready? Here we go. I'm going to do a series of 3 or 4 very quickly 5 seconds on each question, typing in yes or no. Legitimacy of box. First one is located right here. Get ready, 5 seconds on the clock, yes or no. Legitimate box, yes or no, right there. 5 seconds on the clock. 4 seconds. Type in your answer, a Y or an N. Y means you feel that's a legitimate region box, yes. N, no. Simple question. 3 seconds left. Enter your reply. If you were trading the Russell tomorrow morning and this happened right here, would you take it at short? Well, I'll help you out. The background's red, so you're looking to short. So I'm going to take that off the table. Trend is down. 1 second left. Time's up. All right. Box number. I'll circle back and explain each one individually, okay? Box number 2 would be right here. Five seconds on the clock. Legitimate retracement, yes or no? 4 seconds. Typing in a Y or an N, signifying your feelings on that box right there. That appeared tomorrow. Would you take it? Like I said, the trend's down. It's helping you out, so you're taking short trades, yes? Only, short only. So no longs there. 2 seconds left. Legitimate, Y, yes, and no. 1 second. Time's up. Okay, good. Third box, I'm going to draw up over here. Ready? 5 seconds on the clock. And the box would look like this. Y or an N, counting down from 5. Third box. 3 seconds. Y, yes, legitimate. You would take it. Short, as we described. Down 10. Excuse me. Hold on. Take a sip of tea here. 2 seconds on the clock. Get your answer in, please. Time's up. Okay, so let's take each of these retracements sort of individually, okay? Now, if we go back to our analogy to the strike zone, if you recall, the strike zone looked like this, right? I mean, probably the easiest way to think about it. In fact, mentally, I sort of think of it this way. I've done it so many times. I don't draw it on the chart. Obviously, I just pretty much kind of know, where I'm going to get in and out. And you will over time too. You're going to commit all this to your subconscious, and it's like walking and breathing and what have you. It's all going to be in your subconscious. You're not going to start. That's where you want to get to, where you're not really thinking about it. You're just doing it. So this is up at your shoulders. This is what we call a deep retracement. The trend is still down. Now, this is what I was saying earlier, okay? In the case of deeper retracements, it could possibly change the background color to opaque, to this sort of neutral color, and the bars could turn blue. Now, look, a lot of traders, and it's perfectly okay. I'm going to tell you, it's perfectly okay. I would suggest that you practice taking these type of deep retracements in trends, and because that's good to have in your trading repertoire for when you get this, because you can see that this was a beautiful short that made good money, right? See that thrust move? That's probably one of the biggest chunks of that down move was right there out of that box. So, if you get nervous with the blue bars in a downtrend, it pokes up high. Sometimes these are called phantoms, where, you get all the way up at or near the outermost band. You really should try to work those in to your mix. I know they're tough. Everybody loves a mid-band box, no question about it. Everybody loves a mid-band box, but you're excluding 2/3 of your retracement trades if you say, well, I'm not taking the deep ones. And you know what? I don't like the shallow ones either, for that matter. I'll just wait till it gets back to the mid-band. I'll just take those. Right? No, you got to get to learn the whole thing. Learn the whole thing, okay? Now, this box right here again, this is borderline, mostly more towards the no. You can see here that the bars just sort of wicked stealth and really never closed above line 2. In my view here, for this to be a yes and have legitimacy as a short box, it would have had to at least go to like here. You would want some bars coming up, at least up into here, kind of like you got here and kind of like you got here. Here you got all the way to the midband, so I didn't ask this one. This is an obvious one. Everybody would have said yeah on that one. That's a no-brainer. Kiss the midband rollover. That's just a put a market order, limit order, and draw a box. However you get in, that's totally legitimate. Now you can see the point we're making here on the shallowness of the depth of this retracement. There is just simply, by the time if you drew it like I have it, you'd be filled on that bar right there, and you would have got absolutely right at you've been filled like right at the swing. Even if you drew it tighter like that and you got in on that bar, you got like 2 ticks, 3, and then bammo, right? That could have been a full stop out right there. Yeah, you're right, Davin. Not even enough room for a scalp. So as these markets are pulling back, as these markets are retracing in trends, up or down, that should always be going through your head. Has it come far enough? Can I at least where is the support level in the downtrend or resistance in the uptrend? And if I get filled on a short, is there enough room to get a scalp off? Can I at least get 6 or 8 or 10 ticks out of it? And if it's really shallow, super shallow, and the answer is no, then the answer is no, and you don't take that trade. You don't draw that box. Does everybody see the difference between this and this and these? Here, I drew it where it should have gone. Now, if there was sufficient bars that he'd come up and start closing up in here and then rolled, yeah, I'd say that would be a yes. But it didn't do that. Too shallow. That's a no. This one was a no. Now, in the third one, is also a yes. Now, somebody had said this probably happened so fast you probably didn't have time to draw a box, and I would agree. And it looks like it kind of sort of just some kind of short covering program, just bip, bloop, all the way up into here. It's almost got to the outermost band where you could say phantom trade, kissing in a downtrend. You come all the way out here, bars are turning blue. Now, let me ask you this: if you didn't catch this rollover, is there another place to get short on this chart around 9 o'clock Pacific? Is there another entry here, yes or no? 5 seconds. I'm looking at this area right here. And what I'm saying, this rollover happened very quickly. Bip, boop, you missed it. Was there another spot to get in? Is there somewhere else you could have taken that trade if you missed the bip out to the phantom there? Yes or no? 4 seconds. Is there another spot to get in? You don't have to say what or where. You don't have to put in a time or a level. Just a simple yes or no. 3 seconds. Is there a secondary entry here, yes or no? Good. 1 second left. Pull it. Time's up. Yes. Look at this. This is just classic. Remember the ABC patterns we talked about? Okay, so it comes up. It rolls over. A. This is in the case of a downtrend. B comes right back up and kisses just where you would have got in here. And then babamo, back on down with you. Yes. Here was your secondary entry coming off an ABC retracement. Perfect. Yes. And look how nice that trade turned out. See that? Now, it doesn't always happen perfect like this, where you get the ABC, you get in, you miss it, comes back up, kisses. Oh, look at that. I get another chance to get in. Look at that. Region box, limit order, line tool, ray tool, market order, however, by hook or by crook, you're short again. Right here, you're short. Good. Perfect. Total gold stars. Everybody's nailing this tonight. That's so exciting. All right, listen, let's try. We're running out of time. Let's try to get another chart up here. I think everybody has a good understanding of how this works. Let's take a cast of vote. What do we want to see? We got YM, ES, or NASDAQ. Type in. I only have equities here. I'm not going to do crude. I don't have enough time for gold and crude. I'll do that. I tell you what, I promise. When we start Saturday morning at 9 o'clock and we kick that off, please remind me to get gold and oil up here, and we'll look at some of those too. But we're running out of time. I only want to do an equity. Whoever casts, I'll count the votes. I'll count the votes. Whoever has the most votes, that's the chart we put up. Okay, let me see here. Hold on. Wow, they're coming in fast. All right, you're freaking me out. Everybody wants to see they got their instrument they want. Nah. Now I might have to do both then. Can't do one, do another. Counting votes. I'm counting. Let me count YMs. 1, 2, 3, 4, 5, 6 YMs. Okay. Okay, counting ESs. Holy cow. Oh my goodness. 1, 2, 3, 4, 6, 7, 8, 9, 10, 11, 12, 13, 14. Oh, a lot of ES traders in here. I'll be darned. I'll tell you what. I'll go a little over on this session here. Let's do this. Let's try to squeak them both in. I'll try to get right around the open, and we'll take a quick look at what happened on both real quick, okay? Let me start with YM. We'll go back to the open today, and we'll talk about it real quick. And I'm going to squeak in ES too. And then, like I said, remind me on when you come on Saturday morning, remind me, please, to also show some crude and show some gold. Okay, going back to the open on YME. Stand by. Man, there's a lot of bars. Man, this thing really moved. Okay, here's the open. Let's quickly, to tell you what, I think the best way to do this is just to sort of look at it together, and we'll talk through it because the exercise is so time consuming that it's not. I don't think we're going to have sufficient time to do that. Okay, so here is YM, the mini Dow, $5 a tick at the open today. Now, and here's what I want to say is that, there are cases where the first 15 to 20 minutes, on these markets are 5, 10, 15, sometimes 20 or 25 minutes, can be extremely volatile until the markets sort out what direction they're going to go ultimately. Now, here is a case where the market was going sideways, YM into the open. So we already knew there was support and resistance right in here. In this condition, technically speaking, you should be buying support. So there was a buy here and there was a buy here that stopped out. Now, I can tell you for a fact that this market was moving way too fast to try to put a region box right there. I mean, this thing just ripped right through support. So this, you couldn't really, unless you had a sell order sitting here, you probably pretty much missed this leg down right here. Now, you came back up, and if you'd drawn a region box under the midband that looked like this, engulfing these candles, you never really got filled short. And at the time this painted, let's go back and look at when it would painted. You could have made the exception to trade both ways, but if you didn't, you never got filled short. And so it bips up to this upper swing right here. Now, when we see this, and it changes the background color, and it comes up, and is this a legitimate short here, yes or no? 5 seconds. In other words, when this happens, is this still technically in a downtrend, and it would be acceptable to short that, yes or no? Look at the background, look at the swings. I'll help you out a little bit. Let me help you out a little bit here. What do you think? Yeah, it's a phantom trade. Yes. Realizing that it could go either way, and this is a potential trend change afoot. So this is sort of a little bit of the gray area when we look at trades. When you're in a downtrend, and you're trading this phantom type area between the midband and the outermost band, that the answer is yes, that is a legitimate short, and it worked out because it came right back to the midband. So when you take phantom trades that go deeply in the other direction and you take what you feel is still the direction of the trend short, your goal is to at least get back to the midband down here, which it did. So the answer was yes, that's a legitimate short, and yes, it worked out. Now, as Paul and a few of you pointed out, you have to have your spidey sense up here because you've taken this swing out and you're coming up and you might take that swing out. And so let me ask this question here. On this region box right here, type in your feelings on this. And there's going to be 3 conditions with 5 seconds to put in a letter. L is for long only. S is for short only. B is for both ways. On this region box, in the condition it was in at 6:56 a.m. Pacific time today, 5 seconds on the clock, would you have enabled long only, L, short only, S, or B, you would enable both directions? Now, there's several components that make that decision come into play, and we'll address them in a second. Literally 2 seconds because your time's almost up. L long, S short, B both. Tomorrow morning, YM comes along. It's 6:50 tomorrow morning, and it looks just like that. What are you going to do? What are you going to do with your region? What are you going to do with your limit orders? You're going to put a buy and a sell? You're going to box it? You're going to jump in? You're going to draw a line? What are you going to do? 1 second. Get your answer in. L, S, or B? Time's up. The answer is both. And I think almost everybody in here tonight, total gold star, you got that right. Now, why would it be both? And of course, you see we were filled long, and the market just took off and had a totally outrageous long trade. See that? Then you had another pullback right there. Last question of the day. We're running out of time. I'm not going to get to ES. I'll have to do that Saturday morning too. But don't worry, it's recorded. This is all recorded. We're going to record Saturday morning. We'll get an we'll start with ES. We'll start with crude, and we'll start with gold. We'll get to all those Saturday morning, and we'll record it, and we'll send it to everybody. So don't worry about it. We'll get all the instruments you want. Yeah, it's within an hour of the open of the market. Perfect. What did we say was the exception? If you just look at this box, the background is neutral. You are within the first 30 minutes of trading, right? We said total trend change can occur, right? And this could be a continuation of the downtrend. We don't know. So you want the short enable, definitely could get down to here and break it, no question about it. However, with this spike up to here, we're getting an inkling that maybe some buy programs are going to come in and they're going to push this thing up. So yes, legitimate both, box, filled long. It turned out to be a beautiful trade. That could have been your one and done. You could have not taken any of these trades over here, any of these trades, 656 long box, long on close one of those bars right here, trail your stop, couple of contracts, bammo, you're done. Well, John, yeah, I mean, if you're on the East Coast, you're going to have to look at your charts and everything would be plus 3 hours. Okay, so that would have been, 9:56 your time. Between 9:50, it actually sat there for quite a while. I mean, here's 6:56. It didn't break until 7. Spent 3 or 4 or 5 minutes just sitting right here. I mean, you can't make an excuse you didn't have time to draw a region box. You're going to draw a region box, got to refill a coffee and come back and been filled and been in it. All right, Paul. Okay, all right. Everybody going to making a case for ES. Let's squeak a quick ES chart up here, and then we'll be done with it. Let's see if I have one ready here. Oh, yeah, I do. Okay. All right, let me get ES here. Just squeak it in real quick. We'll do a quick squeaker. Like an ES squeaker for you. Squeaking it. Squeaking it. Hold on, let me get it. All right, you ready? Hold on, let's take a. I'm going to do it this way. I'm going to look at the big chunk of the morning in just one swath to get it through quickly and efficiently, so we all can discuss how to approach ES. Now, here's what's going on with ES. Okay, this is heavily institutionally traded, $1.5 million contracts a day. You know, big money pushing it around with a lot of scripts. Okay, you know, the big houses, most of you know, are paid to give liquidity to the market. So their trade cost is literally nothing. If they get a tick, they make money. Okay, and so constantly you have buy programs. Just to let you know what's going on. Some of you know this. With ES, there's buy programs, buying and selling. Tick, 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 take a tick, take a tick, give a tick, take 2 ticks, give a tick, 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 all morning, all day long. All right. So the way you make money on ES, and by the way, you really want to dial it down to a 2. You don't want to put a 4. There's just not enough movement. This has less than a half to a third of the movement of other markets. So if YM runs 70 ticks, you'll be lucky to get 20 out of ES. Okay? So you really want to go with the smaller bars. Everything else is the same. Power meter is the same, predictor is the same, turn predictor on, turn predictor off, stealth is the same, midband, everything, nothing changes in terms of trading methodology. But you have to be very patient because it moves slowly. Okay, imagine having Geritol and getting in your rocker and going to sleep. It's not a fast mover. It just isn't. Okay, and these moves take time, so you got to be patient. In the case of where it came to the open, for ES, 630 is right about here, you can say that the market was sideways to down. So each one of these rollovers was a legitimate short trade right in here. If you're trading right up into the open, you get, and ES does this a lot, so a lot of markets do this, you get an exhaustion spike where it takes out that swing and does a flush, comes all the way back to the midband. Now, at the same time that YM was forming its region box, and YM can be a proxy for ES. In other words, you're going to find most days ES trading charts will look very similar to YM. In some cases, one will lead the other. Now, if I was to go back and pull that YM chart, which I'm going to do, we can see that YM had broken and run before ES did. Remember I said YM can be a proxy for, everyone knows what I mean by that, right? When I say proxy, what does that mean? When I say YM can be a proxy for ES, what am I talking about? What does that mean? That makes no sense, bap bap. By the way, that's what my little 4-year-old granddaughter calls me, bap bap. Bap bap, that makes no sense. I don't know what you're talking about. You're crazy. You're a crazy old man. That little girl's so funny. Yeah, proxy means that it's going to look a lot alike, right? Meaning that you can look at one and, for the most part, kind of anticipate what's going to happen with the other one, right? So that's what a proxy means, that you can look at one, and it's going to, in the end, it's going to look pretty similar to the other one, which is the case of what you have here. So, let's say, here's a good way to do it. Let's say that you have the live room up on a chart or on your laptop, and you're looking at YM and you're hearing YM calls, but you want to trade ES. So on your desktop, you have an ES chart that looks like this. Over here, you find that YM has a region box and starts to break up right before or at 7 a.m. Pacific time, right here. Now, at the same time, you have a region box drawn on ES, and it's just sitting right here like this from 6:53 all the way over to 7:01 or 7:02. So within a minute or so, this actually broke a minute or two before this one broke. That's what I'm trying to say. If you want me to be clear about what I'm saying, this one, YM, led ES. And that's usually the case. YM is normally going to lead ES. If YM's heading up, let's say it was a reverse. Let's say, for instance, YM was way up here and just running like a big dog. And you're still dinking in this box on ES. What do you think is going to happen? You think it's going to dink around here or start to go down? Think it's going to break down or just, whatever? So back to the question. YM, here it is 702, and YM is all the way up here. And let's say hypothetically it's 702, and ES is sitting in this box. What do you think? What's the likelihood of what's next to happen? It's probably going to go up. Right. It will follow. Yes. If you want, tomorrow morning, put them right next to each other. Put them right next to each other, and you're going to be amazed at the similarity. And it's not always perfect. You get divergence. It's not, nothing's 100%, right? This is a beautiful long trade. Let's suppose you're filled at 27.20 long, and you rode it all the way up here to 30. 10 handles times 4 is 40 ticks at 12 and a half. That's $500. This is a $500 trade. It doesn't look like much on the chart, does it? Doesn't look like much. But you're filled on the close of that bar, and you stopped out up here, somewhere roughly, and then this was your trade. This is your long trade right here, 40 ticks, $12.50 a tick. That's BAMO. One lot, $500. Thank you very much. And the whole thing took about an hour. You're getting in around 7, and you held it to around 8 o'clock. Now, anybody remember this? I was calling this in the room. Remember? I said, put a box there. Look for a pullback. Look for a break. I was calling the trail stops in here, too. Anybody trade that? I was saying, get your trails to 24. Should hold 25 on a pullback. 27, 28. It's hitting 30. It's breaking 30. It's going to 31. It's going to 32. Put your stops at 29, 29.50. I got out right here. Anybody remember that? I'm not making that up. That really happened. I really took this trade. I know some of you did too. Everybody was saying, hey, that ES thing really worked out. You remember that, Byron? Mario? Those numbers sound familiar? Well, this is what I was looking at. This is the trade I was taking right here. Good. Yeah, okay, so here's the trade-off on ES, okay? If you like a slow-moving instrument that, some days doesn't have a lot of movement, it can be range-bound for mind-numbing amount of time, ES is for you. If you want a slow creeper, you can put something on. It's probably not going to hurt you on some big volatile thing because these scripts are controlling it so much. ES might be something you want to take a look at. Yep. Now look, there's a ton of liquidity. I mean, it's not unusual to see 500 offer and bid and 1,000 ask. You could put 200 contracts on here and wouldn't even lose a tick. So, I mean, if you're looking for volume, this is the instrument for you right here. Totally. ES is totally the instrument if you want volume. Unlike the Russell, like EMD and some of those other instruments with very low liquidity, you're going to get slippage. You're going to get slippage, meaning that, you think you're going to get filled, here, and then the next thing you know, you're filled 3 ticks higher. That's what slippage is. Slippage to get in, slippage to get out, plus commission. I mean, I suck up 4, 5, 6, 8 ticks just getting in and out of those smaller instruments. Yeah, so looking here, that's a good point, Paul. YM went from like 90, 93, 94-ish all the way to 66. I mean, what is that, 70 ticks? This is a 70-tick move. 70-tick move on YM, and this one ran 20. So what's that? That's a third of the movement. A third of the movement. And this move over here took an hour. Took an hour from go to here at 7 o'clock where it broke, and you didn't get out until after 8. This move happened in less than 15 minutes. In fact, you could say that this move was done by here. You got filled long, maybe you stopped out over here. So you were in that trade 9 minutes, 9 to 10 minutes. This move happened, and this move took an hour. Okay, so let's see where YM wound up. By the time 8 o'clock rolled around on YM, let's see where 8 o'clock is. 8 o'clock on YM is way over here. Let me paint some vertical lines in so you understand what I'm talking about. Here's the entry at 7 long, and here's 8 o'clock on Weimer, 8:03. Here's the entry on ES long at 7-ish, 7:02, perhaps your fill. and you get out at 8:03 over here, all these bars took an hour. As opposed, you know, actually in that span of time of 1 hour, YM actually moved. Let's look at the totals here real quick. You know, you're looking at 926.90 all the way to 8. That's 140 ticks. 8 to 1, is that right, Robert? YM to ES is as much as 7 to 8 to 1. Well, that's the case here. Yeah, this whole move here took 20 ticks in an hour, and this was 140 ticks in that same span of time. So all these bars painted at the same time ES was doing this, which is good. I mean, you know, you can clearly see that YM had several entries on these pullbacks, so it was still heading up. These pullbacks here, these sort of more pronounced pullbacks on YM, equate to these pullbacks right here. Much less pronounced because there's so much volume going on. See this little retracement? You didn't get to the stealth line. You didn't get to line 6. Here's another thrust. Here's another pullback. You get the idea all the way up, right? So in actuality, was that 40 ticks? Am I off a little bit here? Philip, let me do the math again real quick here. That could be off a little bit. Okay, you're filled at 2720, right? And here's 2730, 10 points, and it's 4 ticks a point. Yeah, 40. Yeah, you're right. 40. I was off. Yeah, you're right. Yeah, 2720, 2730, 10 points times 4 ticks per point, 40 ticks. Yeah, this is 40 ticks. So in the first 15 minutes, you went from 20 to 25. 5 times 4 is 20 ticks. 20 ticks right here. This first move is 20 ticks, and this move right here was 70. Yeah, so that's 3.5, 4 to 1. Yeah, so it's just a huge difference. I mean, both are very good instruments to trade. You really want to just sort of settle in and figure out what you really like and get really good at it. It really doesn't matter what it is. Everybody's a little bit different. We have people all over the world that trade, you know, currency futures, commodities, you know, bonds, ZB, ZN, ZF. The charts all, I mean, the methodology of entry on retracements and trends is all the same. It just pick an instrument and put it up there. Get comfortable with it, and that's how you're going to make money every day. All right, let me stop the recorder here.